Hello, I'm Trader Bobo. This is part 4 of Trading Concepts. Last time in part 3 we were talking about retracements. It is the same tool up the top that we use. But where last time we were looking at the 236, 382, basically looking at retracements of a move between 0 and 1. We're going to look at the numbers beyond 1, the expansion of the range, or of the fib pull. I won't say range as yet. So just to recap on what we looked at last time, these numbers we looked at 618, 382, 236 and 786. We're now looking at the expansion, so we're looking at the numbers above 1, the 1.618, 2.618 and the 4.236. If you don't know how these are calculated, have a look at part 3, a quick and simple way of showing you how they are calculated. I'll whiz back in time again. I'm only going to do a couple of examples this time to try to make it quick for everybody. So same process what you're doing when you have an impulse leg up, you're looking for the retracement using the fib tool. Same here. So you take a pull from the bottom to the top, and if you're trading this back in April, March time, you're looking for bounces off support, off pivot points, whatever you kind of want. This would be an excellent one. You got a pivot point here at your 618. So mid-April you'll be looking at this sort of trade if it was on the cards. So move down towards your 618, nice bounce off, and then violate the bottom of the range. It expands past 1 essentially. So what do you do when you get to this point? You can use an expansion. So you'll violate the bottom of the range and you're trying to work out where possibly the bottom is. So what you can do, I've got a template already made up, and I'll show you what sort of numbers I'm using. So I'm using the 1.618, sorry, the 2, the 3. So I like to keep these as the ranges. That's the distance between 0 and 1 is the same distance between 1 and 2 and 2 to 3. So I'll keep them on just as reference, and we'll get to range trading at some point. So 2.618 and the 4.236. I mean, if it's going to go that deep, it's fairly extreme. But yeah, so as soon as we violate the bottom of the range, go into an expansion, and you can set targets of where price could go to with other possible confluence. It could be an SR level, it could be a bigger fib pull. Let's just do it for the sake of it to see if there's anything that lines up with it. You'd have to go back to your standard retracement. For that, you have an excellent point around here. So up from this whole range, your halfway point is at 11.695. Let me just keep that on in case that is handy. I'm going off piste a little bit. Yeah, again, it could be an SR level, but we'll play, see what happens, and see if this fib expansion comes into play. So this is going back to part 3. You had a nice bounce off your retracement at your 0.5, and then you have a very nice bounce off your expansion from this range. Let's go a little bit closer to see. So yeah, that's your. So you bounce off your halfway point of the bigger range, and then a really nice touch of your 1.618, your expansion of the range. So that's how you use expansions. Again, and then you'll be looking at a breaking market structure, which you had here. So then you'll be looking at a possibly a bullish move from your 618, and you do the same thing over and over again. Go back to part 3, your tracement. You'll be looking at your target, and then if you violate the top, and then you go into an expansion. So it's as simple as that. It is your expansion of the range, violate at the bottom again, so that this retracement would change. But yeah, expansion of the range. If I stop this, and I'll have a look at a couple of, or just maybe just one recent one. I've been trading the S&P 500 quite well this week. Let's get this SRs off. If you don't follow me, by the way, on Twitter, Trader Bubble on Twitter, same name, and there's a picture of what I've been doing this week. Quite a lot of buying the bottom, selling the top, and I caught a lot of these swings by using some tools I've shared and some tools I haven't shared. But what do we do at the end of the week? Let's have a look at the end of the week into the hourly chart and see if anything will help. So we had a number of good impulse moves up. We then broke this range, and let's turn on. That is a standard retracement. So again, if you were playing this as another impulse move up, you'll be trying to find some sort of bounce off your 618. Once you've violated the bottom, go into your extension and a really good weekly close down to your 1.618. And again, you can leave these on the chart. You're better off using, we can do it any time frame, but I use a lot of high time frame expansions. Let's see if we had anything there as the top to the bottom there. Nothing that helps. There are a couple of advanced settings you can see here. So yeah, 1.276, sorry, 1.272. This is getting a bit complicated, so you can turn off if you want to, but that is your square root of your 1.618. And these are just the equal levels between. So these are a little bit of snipers when you're looking at deviation of ranges. Not going to cover that, but they're more sniperish. So I would ignore them for now and just keep on to these until we get a bit more further down in the series. So yeah, I hope that hopefully that showed you how to use expansions. Don't see it done a lot. Some people do. A lot of people use it for range trading, which we'll get to at some point. But really helpful tool, especially if it coincides with any other form of SR level or support pivot point on your chart. So yeah, that's it. An expansion. They're the Fibonacci numbers you use. Hope that's helpful, and see you in part 5. Thank you very much.